All right. Well, if that was the lay of the land on Asia, I guess we get to talk a little bit about Europe from two of the fastest stacking Bitcoin treasury companies out there who I think looking at the leaderboard are neck and neck in terms of Bitcoin holdings. A little friendly rivalry between the French and the English here.
The best kind of competition here.
Yes, friendly competition. So I guess we've heard from both you guys here already today, but maybe to start with a little bit, I'd love to hear your perspectives on the local markets, especially the local institutional markets, like why you decided to launch a treasury company in that specific exchange or region, and the interest you've seen, especially both on the retail, but especially the institutional side.
Yeah, happy to start there. Yeah, so I think the global context is helpful to tee up first. So, like in every capital market in the world, there are idiosyncrasies, and there's pros and cons. Just based on the regulatory environment, and the retail context and the institutional context in every capital market. In the UK, there are some factors that we think amount to some great tailwinds for a Bitcoin treasury company. Perhaps the biggest one is that retirement account capital hasn't had a good way to access Bitcoin, Bitcoin exposure. The FCA, the SEC, in the UK hasn't allowed that. And so retail investors in particular are frustrated that they are not able with their retirement account capital to just have Bitcoin exposure. And then here come Bitcoin treasury companies like Smarter Web that offer compounding Bitcoin. And what's better than Bitcoin? Compounding Bitcoin. And it comes with volatility, and it doesn't cleanly track Bitcoin, but it's the fundamentals there are very compelling. So I think that's a tailwind for support of Smarter Web's stock and adoption from the retail base. And that support is now translating into conversations with institutions, where I think in every capital market there's a learning curve for retail and for institutional investors there. And institutions take notice when retail drives a stock's valuation higher very quickly. And we're certainly seeing that with Smarter Web. And now, Andrew likes to say that, at first they were laughing about, the idea of Smarter Web, and they're not laughing anymore. Now they want to talk, institutions in general in the UK. I think that's probably a story that's playing out in every capital market that now has a Bitcoin treasury company that's running the flywheel, where there are pros and cons and certain idiosyncrasies in each capital market, and I think there's tailwinds everywhere for different reasons. But yeah.
Well, first of all, I'd like to say that I'm extremely grateful for Strategy and for Metaplanet to have led the way before us. I think they have done tremendous work in the US, in Japan, showing the best practices with ethics and with the best standards on a long-term perspective. And as well, UTXO with Tyler there, backing the treasury companies in different parts of the world, and also emphasizing the importance of having a long-term approach to the Bitcoin accumulation and having the right message and the right positioning, not being there for a short-term trade, but being here for the real mission of bringing Bitcoin to the capital markets in a way that is the most accretive for investors, but as well the most long-term potential to be brought to the scene of capital markets. So Capital B has been created as a Bitcoin treasury company back in November 2024. We were actually the third in the world after Strategy and Metaplanet to be really focused with a dedicated team, a dedicated person to the Bitcoin per share increase over time. I used to say that I wake up BTC yield, I work BTC yield all the day, I dream BTC yield. That is my only function in the company, and I love that, okay? And every person we recruit is as laser eyes focused as I am, And that makes a whole difference between thousands of companies that hold Bitcoin on the balance sheet and companies like Smarter Web, like Metaplanet, Strategy, Capital B, and many more. We saw, I think, a lot of in Asia that are coming up. And that makes a whole difference. And the difference, you can calculate it. From the launch of our strategy, we have been the best performing stock in the EU. We have been the best performing stock in France, the most volumes in different points on Euronext Growth Paris. And we are the most discussed stock in France when you look in the forums of investors. In terms of why we chose France, well, I'm French, so that was a good part of the choice, of course, but we benefit from unique factors. First of all, it's one of the most liquid exchanges in the world with Euronext. I think you can experience that in London with the liquidity in mature capital markets that already have all the mechanics in place, already have the regulator maturity, all the flexibility in terms of securities issuance. And we are a team of financial engineers. We are not there like opportunists adding a bit of Bitcoin to the balance sheet and see what happens. Everything is planned months in advance. We are setting up the foundations for one of the strongest balance sheets in Europe. And if we are able to reach our objectives, 21 to 42,000 Bitcoin over the next 3 to 4 years, and hopefully 1% of the total BTC supply over the next 8 years, we could be a 400 billion market cap company. And that would be one of the largest companies in Europe. So I think the opportunity is tremendous, but you need laser eyes focused activity and team, and you need a long-term approach to Bitcoin accumulation.
Laser eyes all the way. No, I think it's really remarkable what these gentlemen have pulled off. What Alexander just mentioned, by adopting a Bitcoin strategy, but not just adopting one, going all in and really laser focusing on BTC yield and that growth trajectory, becoming the best performing stock in the whole EU. And then we've got Smarter Web, which I think someone told me is the best performing IPO in the history of UK capital markets.
That's correct.
Incredible.
Quite a long history there too.
Yeah, of course. So the power of a focused Bitcoin strategy. I think, you mentioned a little bit, Jesse, but in terms of the institutional appetite, they're not laughing anymore. They're starting to talk. Like, where do you guys assess the education level, the allocation willingness among the true institutional allocators in your respective markets? And I know you both have a very strong one in common now with Tobam, the asset manager. So maybe if you could talk through a little bit about what that process looked like to get them on board on your cap table, and how you see that changing kind of the institutional appetite.
You want to talk about Tobam first, and then I'll talk about
So one of the key differentiation that we have at Capital B is actually our capitalization table. And that's exactly what Tobam, founded by Yves Chefati, it's a 2 billion asset manager in France, and it's been the pioneer for Bitcoin since 2017. And he told me, Alexandre, you should talk more about your capitalization table. And when your capitalization table is formed of a lot of float, plus a lot of Bitcoin maximalist, long-term oriented backers for the company, that's a massive strength for the company. So we have Tobam as a key shareholder since the very beginning of the strategy. I used to know Tobam from my experience with banks before joining Capital B. And we have also Fulgur Ventures, of course, UTXO management. And we have this ability in terms of market strength, both and market bearishness sometimes to continue to aggressively raise capital in a way that is completely Bitcoin oriented. So we were able to issue the first Bitcoin denominated convertible notes, and it was also the first subscribed with institutional investors. So Tobam participated directly into the Bitcoin denominated convertible notes, and Tobam is a professional asset manager and is also taking positions in other Bitcoin treasuries like Smarter Web. So before letting you going further on the Smarter Web, I'd like to say in terms of institutions, what we are seeing is that there is institutional retail investors first. And I mentioned part of the capitalization table, but 20% of the company is now owned by Adam Back. Okay, so Adam Back is the only person mentioned in the Bitcoin white paper. We wouldn't literally have potentially Bitcoin as it is today without him. And he is one of our major shareholders since the very beginning as well. And it's institutional type capital from retail investors. And you also have retail analysts that are on X and that are providing extremely educated analysis. And thanks to all of you and all of them, we have now institutions getting to the same understanding as we had on our side like nine months ago. And now institutions are reading analysis from brokers and traditional institutions that are literally taking snapshots of analysis on X and showing that to major institutions. And so we are so early that institutions are just right now looking at this and understanding Bitcoin treasuries. And we are planning major roadshows with major institutional investors over the next weeks, months. And I think that's not at all priced in the market.
Yeah, great summary there. I think Tobam is a pretty special institutional investor. They get Bitcoin. Yves is known for his work in creating the formula for diversification. So pretty brilliant guy there who gets the point of Bitcoin. And of course, there's Bitcoin institutional investors. And what we're seeing in the UK is, Smarter Web is the best performing UK IPO ever, and fastest growing stock, I believe currently still the fastest growing stock in the world in 2025. Institutional investors in the UK are having to figure out, what did we miss? What's going on here? So we're starting to see coverage now of the Bitcoin treasury company sector, and we've seen a few reports where there are screenshots from X, which is quite something. But they're trying to figure out what individual, Twitter-based analysts have been figuring out for the last year. And they're behind the curve on that, but they're trying to catch up, trying to understand what did they miss and what do we need to know. So they'll get there. And so I think that, that's the success of Smarter Web and Bitcoin treasury companies globally based on retail demand is causing institutions to have to get up to speed and have to figure out what they were missing. So it's led by retail, it's led by smart individuals who figure it out first, and the institutional conversations are coming as a result of that. So very different from TradFi and how that world works, but I think it's a sign of what's coming for overall capital flows into the sector, since the one thing that TradFi doesn't like doing is letting retail get all the gains without them.
I want to double click on something you mentioned, Alexander, in terms of the Bitcoin denominated convertible bond. Am I right that Capital B was the very first company globally to pioneer this debt structure?
Yeah, so we were the first to create that out of the gate. I remember it was back in December 2024. We had 40 Bitcoin on the balance sheet. At the time, there were only 60 companies in the world that had Bitcoin on the balance sheet and publicly traded. And my benchmark was strategy and Metaplanet. And I was wondering, how can we get to that 1,000, 2,000, 10,000, 20,000 Bitcoin by raising substantial amounts of capital while not having yet a long track record, because the company was created literally 2 months ago. At least the Bitcoin Treasury company strategy was created 2 months ago. And I spent 1 month to engineer from scratch a convertible debt structure that would have the same form as the strategy one, but without short sellers, without any credit risk, and with the same advantages of premium and zero coupon, and with the ability to provide the investor with a form of protection in case the company would not work, because it was very early stage, and in a form as well that both the investor and the company would get a completely outsized return profile in case it worked. And the company is up plus 1,000, 3,000% since December. And we have now 2,200 Bitcoin on the balance sheet. And how did we do that? Well, we denominated the convertible debt in Bitcoin so that it could be directly subscribed in Bitcoin, so that it would appeal extremely strongly to Bitcoin maximalist investors that would want to invest in a Bitcoin treasury company and outperform Bitcoin, but have the downside protection of Bitcoin itself. And through this, and that's why I mentioned it's very important to be in a mature capital market, and why the European Union provides this type of flexibility, we incorporated a subsidiary in Luxembourg. You know, the investment was not signed yet. And I said, we are going all in on this, and we are creating the subsidiary, and we are setting this up, and when it will be ready for the investor, we will make the deal. And we made the deal. So we had as well, of course, UTXO join, and we priced it at a 30% premium to the 20-day moving average, and there was a small detail that investors discovered. It was that there was a tranche 2. And when we were back in the US, and the US investors discovered the stock, in May, June, at the same time, we were able to have the investors subscribe tranche 2, that was 1.5x tranche 1, and the stock completely skyrocketed. So I think that provided with some standard in the market in terms of how you can do a very well-engineered Bitcoin convertible note that has a long-term time horizon, and that protects the company, because if you believe in Bitcoin, then the conditions for conversion the probabilities are like 99.9% of probability, because it's a 5-year time horizon, and Bitcoin also does its own thing over this time horizon. So that's the history of it.
It's a great story, and I think it's a great example of like the corporate finance wizardry that's possible in a Bitcoin denominated worldview, and obviously for us as investors on that note, like I was talking about earlier, we really view Bitcoin as like our hurdle rate or our kind of base asset, and so this created a structure that very attractive for us as a Bitcoin focused fund, where we felt good about the downside protection, with the worst case that we would recover our Bitcoin over the life of the note, and the upside to convert into shares that was hugely profitable for the company and also for all of us as investors. So very, very creative and innovative structure, and now one that Smarter Web's adapted. So tell us a little bit about the iteration you guys launched most recently.
Yeah, so we loved what Capital B did there, and we think that's a great structure. And so we copied that model and made our own variation on it. So we launched Smarter Convert, did our first tranche with Tobam for $21 million of a Bitcoin-denominated convertible note. Our approach there is a little different in that we want the shorter duration and a little bit lower conversion threshold because we want to turn that into equity. We want that to be turned over quickly so that we can do it again, and keep our leverage ratio low, while we hopefully keep repeating that. And the trade-off that comes with that is that by having a shorter duration, you do increase the probability that you may have to return the Bitcoin. If the stock doesn't outperform during the 12 months or 18 months that, depending on the first tranche is 12 months. And that's the trade-off that we like for our strategy. We want to try to, cycle through those quickly, and we view it as a way to tap into capital sources for equity issuance effectively through this structure where there's a lot of option value in these volatile Bitcoin Treasury company stocks. It's good vol, it's the vol you want. And that creates a lot of option value for a convertible note option. And the brilliance of a Bitcoin denominated convertible note is it protects your downside, but it monetizes, it productizes your vol where you can split that option value with investors. So, a premium conversion is what we get out of it, and the investor gets a huge chunk of option value, where their downside is holding Bitcoin, and their upside is that option value turns into something they want to convert into shares. So it's a truly win-win structure that Bitcoin denominated convertible notes create, and we're excited about doing more tranches.
Well, thank you, gentlemen. Unfortunately, that's all we have time for, but this has been a lot of fun, and I can confidently say, looking at many of these companies, that these two out of Europe represent, some of the fastest horses in the race, if you will. So I can't wait to see where you both are when we're having this conversation again 12 months from now. Well, join me in thanking them.
Thank you.
Thank you.